Hey guys, welcome to all of you in this video. Today we are talking about the blueprint of the global liquidity. Let's discuss how the global economy is changing day by day. The blueprint of the global liquidity, decoding the FIMA repo facility and the asymmetric playbook. Let's discuss the 40 trillion peso problem. As you can see on the screen, Japan recently executed the largest currency intervention in history. To defend the yen, they need dollar, and Japan need dollars. What will Japan do if they want dollar? What will they will do? Sell the US debt, and after that, if the Japan needs more dollars, they will sell the US debt, and after that interest rates will spike, and America's 40 trillion dollar debt pile. Foreign selling pushes interest rates up, creating a direct existential threat to the US debt market. It's an existential threat to US market. Let's discuss about the pressure relief valve, decoding the FIMA repo. As you can see on the screen, the Fed has opened its emergency bank to a foreign government. It functions as a sovereign pawn shop. Bank of Japan places US Treasuries, and the days later Treasuries return to Japan dollars plus pre-return at the end, and the days later Treasury return to Japan and receives the fresh dollars. Japan receives the fresh dollars, and after that, what's the limit? 60 billion dollar per foreign central bank. It's a limit, and the status Treasury advocating for expansion results: zero selling of debt, zero interest rate spikes, zero market crashes. The systematic paradigm shift. The old paradigm, the new paradigm. Selling US debt, placing US debt, new according to new diagram, and market impact, spiking interest rate, protected stabilized rates. In the old time, bystander, Fed's role bystander. But now it's a liquidity provider, toll collector, and what's for the yield risk, massive bond market volatility, and now it's a zero credit currency risk. Take away, the Fed is quietly reviving the plumbing of the globally monetary system to ensure central bank cooperate instead of crash. Let's discuss about the playbook is already written in March 2023 as a Credit Suisse faced the collapse. The World Central Bank coordinated to provide emergency US dollar liquidity. In March 2023, Credit Suisse collapse. Page swap line liquidity pool, BOE, BOJ, ECB, SNB, the UBS shotgun marriage. The pattern: when a foreign financial system cracks, the FED opens dollar taps to prevent contagion. The FIMA repo is the 2024 evaluation, this exact tool. The liquidity trap. Let's discuss about the liquidity trap. How let the Fed liquidity injection? See, as you can see on the screen, and the cash, the melting ice cube. Cash. What's about cash? The melting ice cube, quietly diluted by the expanded money supply, and asset rise not necessarily because companies improve, but because more dollars are chasing them. The mandate is to follow institutional money out of the cash and into the asymmetric assets. And let's discuss about the case study 1, AI spending reframe. Goes massive AI capex speculative burn the market fear. As you can see on the screen through the diagram, you can understand pre-sold demand and the $15 billion anthropic data center taxes. The reality, the market misprices Google by viewing its AI spend as a purely speculative. Deals like the anthropic infrastructure bills prove this. CapEx is transforming into the pre-sold, locked in the demand embedded directly into the existing ecosystems. Let's discuss about the Google valuation disconnect. Fundamentals 19 times price to earning ratio, cheapest in 7 years. Technicals, as you can see this diagram, institutional money is moving. The asset has just broken out of key resistance line watched by the Wall Street, offering a mathematically protected entry point in a high liquidity regime. And as you can see, the $5 billion backlog cloud revenue, as you can see on the screen, it's a $128 billion per quarter, the 80% year return. Case study 2. Let's discuss about the case study 2. Getting paid to the on the plate. Getting paid to the on the plate. Zoom. A classic deep value setup. When the evaluating enterprise's value, the entire operating business is mathematically valued below zero. Total market cap $3 billion. A cash on hand $2.6 billion. Cash on hand $2.6 billion. As you can see, in the 2024 generated cash is $600 million. The math, subtracting the cash reserves, leaves the actual business routes, contracts, and the most efficient plate in the industry valued at a negative figure. Enterprise's negative value is $1,200 million. Let's discuss about the macro catalyst, the global supply squeeze. As you can see on the screen, global capacity is managed. It's a 10% mandatory rerouting, checking point closed, like this you can see on the screen. And let's start discuss the more. Geopolitical instability eliminates the primary shipping artery. Rerouting around Africa remove 8% to 10% of the global container capacity overnight. Combined with 5% annual trade volumes growth, a massive supply squeeze directly benefits highly efficient plates. Let's discuss about the anatomy of an asymmetric wedge. The market is currently pricing Zim as if the Hapag Lloyd takeover is over the permanently dead. This creates structural asymmetric. Zim current price is the $26, and the path A and path B. We have the diversion in the path A. The deal revives $35 cash offer, which is greater than 35% upside, and the path B deals remain dead. Political block, structurally protected by sheer cash reserves and the negative enterprises value. The upside features as a dual engine. Either buyout materializes or macro tailwinds organically re-rate the asset against a hard cash flow. Let's discuss about the last part. As you can see on the screen, the liquidity playbook, 2 paths. Goals versus Zim sector. Let's discuss about the sector. It's a major cap tech, goes. And if we talk about the Zim, it's a global logistics. Thesis, growth at a reasonable price. In this Zim, deep value merger of downside protection, unmatched cash flow, and the P ratio of the 19, and the negative enterprises value, and the massive cash pile in the Zim. The catalyst, that transition AI capex into the locked revenue, and in Zim, Red Sea supply squeeze and M&A revival. Predictions are guesses, framework are repeatable in regime of expanding monetary Plumbing holding a cash generating asymmetric asset in the ultimate risk management system.